Get the outlook on Bluescope. Plenty more besides. Say good morning to Julia Lee from Bell Direct. Julia, what's your initial reaction? Those shares, incidentally, just coming online, adding 1.3%.
I guess Bluescope shares have been battered, but our expectation was to see underlying net loss after tax of $106 million, and it's actually coming out $129 million. So the loss larger than what we had expected. If we have a look at the EBIT loss as well, that was larger than what we had expected as well. If we have a look at what this is driven by, it's really driven by loss in the domestic steel operations, and we're still seeing that high Australian dollar making things difficult for Bluescope Steel. We have seen a number of restructure moves, and that should help fixed costs by about $315 million, and that will really start to flow through in the second half, especially in the fourth quarter. So that should be a positive for Bluescope Steel going forward. But of course, the key part of their business is the domestic steel operations, and that still remains under pressure because of the high Australian dollar and the lack of demand in that business as well. So Bluescope Steel coming out with a loss today, bigger than what we had expected.
Meanwhile, the market, as I say, just digest it as it gets underway. Not a bad reaction, all things considered. Amcor, by contrast, let's just have a look what their shares are doing. You walk me through what some of the takeouts for you. They're adding up 2.75%.
If we have a look at Amcor, we were actually expecting to see a profit before one-offs of about $315 million, and it has come in slightly below our expectations at $304.7 million. Still, the underlying was a record. If we have a look at the dividend expectations, our dividend expectations were a little higher at 20 cents. It's actually come in at 18 cents, but to offset that, they have announced an on-market share buyback of about $150 million. Now, this result has really been driven by some of the synergies flowing through from some acquisitions that they've made, especially the Ball and the Alcan acquisitions. We have a look at their margin in the flexibles business. We were expecting to see a slightly higher margin there as well at 11.5%. It's coming at 10.8%, but saying for the full year they should see a margin in that business of about 11 to 11.5%. The key things that the markets were watching for, though, was an update on Europe and Australasia. And the European situation, despite the troubles there, does look like demand relatively stable. So that's a positive outlook statement coming through from Amcor. And if we have a look at Australasia, last year they were saying that they expected EBIT to be quite flat, and it doesn't look like that's changed at all. So if we have a look at Amcor's share price over the last 30 days, this is what it looks like, and you can see that the shares have been falling going into this result. Today on the back of the result, though, we are seeing a rebound, and the shares at $7.05 at the moment.